Hey guys, thanks for tuning back into Crypto Mainly. My name's Lee. 304 subscribers now, guys, on my new YouTube channel. Very pleased with that, and obviously I know most of those people personally, so it's a really nice bunch of intelligent people there. So I'm really pleased. Please do like, subscribe, switch on the bell for notifications. We'll be doing live streams at some point in the future, so that'll be something to watch out for. But in the meantime, if you'd like to join my Telegram group, there is a link in the description below to the public Telegram group, which is free of charge. Just come along, join in. A nice bunch of intelligent people there that all share their charts. So a couple of hundred people in there, all looking out and sharing out, sharing their own ideas and things. So a really nice community there. No scammed bots and all that crap that you get in some Telegram groups. That's eliminated very quickly. I do offer a VIP Telegram group as well. So if you go over, if you click on the link from my YouTube page over to OpenSea, you can see there that that's my NFTs which are for sale. If you purchase an NFT, you are entitled to 6 months free access to the VIP Telegram group. Just to verify the account, guys, you'll notice there on the Ethereum naming service that I am the owner of cryptomainly.eth, so you can see my wallet address there is cryptomainly.eth. That can't be replicated or copied, so that is a good way of verifying the account. Let's jump straight into the content today, guys. I'm going to do something a little bit different today and probably scare the life out of most of you. So if you are a bull and a perma bull, you may want to watch the first part of this of the show today, but not perhaps the latter part. But I do think it's important that I just put the perspectives out there. Lots of people are watching the 200 SMA very closely and looking for Bitcoin to reclaim that 200 simple moving average on the weekly, and then to continue up higher onwards and upwards into the moon. But I've got my own take on that I'd like to share with you today. So on the short-term time frames, guys, you'll recall that we were talking about this trade, taking this trade here from the highs of at this point here. So we've entered into this trade. Hasn't touched the stop loss yet, and obviously is marching its way down to our take profit level. Yesterday when I did the video, actually, I think I moved the take profit up slightly, so I did think we'd already hit our profit objective, so I did share that in the group to say that we'd hit the profit objective, but in actual fact, we haven't done that yet, so I'm waiting to be beaten up by my members about that, because I'm sure that someone with their keen eye will notice that we haven't actually hit the profit objective yet. But that's not a problem, guys. You can see from this topping pattern here that we're marching on down. We have got a little way to go yet. The way to measure this is if we go from the wick high to the wick low there, and then we take the measure from the base of the wick there. You can see that actually it's more likely that we're going to end up coming back down to the bottom of the range, which obviously and retest the support line here at the very least. But as I say, guys, we're gonna have a look at something else today. I just want to draw your attention to the S&P, and I'm zoomed out on a daily chart here, so you can see just how significant. Put it on a 3-day, you can see just how significant this trend line is that we're watching. The upper trend line there, and also you've got the lower trend line at the bottom here. But the upper trend line is the one which I really want to draw your attention to, guys. And the reason for that is if we zoom in, you'll see that we are in fact we've got the rejection. We came down and we've bounced. We've come back up as per my projection here. You can see the blue dotted line. We've come back up. There was a gap here in this area here, as I mentioned on the video before yesterday, or the last video rather. You can see there's a gap there, and that's now been filled. And now we're right up against this same resistance line here, which is a little concerning. If we don't break above that resistance line, bear in mind that's a long-standing resistance that's been going on for a long time. If we don't reclaim that level and get and start to continue higher, then there are going to be some problems. So this week has got a couple of events happening. So 27th, we've got the Fed meeting, the FOMC rates, the rate hike again, which obviously we're sort of anticipating. But also we've got the GDP meetings as well this week, which is on I think the 28th. So there's lots of things happening. Coupled with that, we've also got some earnings calls this week and next. So if we look at the earnings calls, you can see that we've got Alphabet, Microsoft, Apple, Microsoft, Alphabet, obviously, which is Google. So Apple, Microsoft, Google, Amazon, Facebook, Visa, ExxonMobil, which is obviously oil, and then obviously you've got Tesla, Berkshire Hathaway, Alibaba, some huge companies putting out their earnings reports in the last couple of days. And as you can see, I think it was last week, the Snapchat put out their earnings, and off the back of that, their stock fell 25%, even though their stock's down heavily, as are most of these companies already. So, people are not expecting to have good results from these earnings calls, guys, and so the traditional markets are going to take a hit off the back of those earnings calls, unless, of course, they surprise us. But, looking at the economy, looking at those individual companies, their stock prices individually, they're down, 70, 80, 90%. Even those big companies. So, if we do get poor earnings reports, which is likely in my opinion, then that would result in the rejection from this resistance. And obviously, the projection, as you can see from here, I think this is a 5-wave impulse wave. In fact, so you've got 1, 2, 3, 4. The 5th wave is not complete yet. I think that we're going to come back down, and the measured move in Elliott wave theory actually brings us back down to this level here, which is at 35. Say 35.50 for round numbers, which I think will happen. I do think then we'll get the run up back going. A nice hefty bounce from there, going into the run up into the back end of the year, which would make sense. We've got the midterm elections, US elections, in November. So it would make sense that we get a nice run up of stocks and shares and things into that US election, and then obviously then the sell off afterwards, which I think is going to be a lot deeper than some people expect. In fact, I'm sure some of you have heard of Michael Burry. He's actually calling for a 55, around about 55% correction from the top. And if we take the measure from the top to the bottom, 55% takes us down to the COVID lows here, which would make sense because all of the money and stimulus of things which has all been pumped into the market up to here has all been then rediluted back out. You think about all the money and things that has gone into people's pockets, what they've put into stocks and shares and cryptos and all the rest of it and everything else. And ever since then, everything's come crashing down. It would make sense that you get this, the reflection of that in the S&P 500. Unfortunately, I do think that and Michael Burry has a reputation of calling the crashes historically very accurately. So when somebody like that says something like this, then you have to take note, in my opinion. But I think we're going to get the reason I'm pointing this out, guys, is I just as I say, if you don't want the life scared out of you, I just want to show you something. So if we if you don't want the life scared out of you, then perhaps turn off now. But if you look at the highs there, and you'll notice at the bottom, we're looking at the 2nd of June there. If you look at the date from the bottom, so from the high to the low there, you'll notice here that that's just under 13%, so 12.94% of a move. So from the 2nd of June to the 17th of June. Let me just check that again, because I think we did. Yeah, that is actually the correct measure there. So 2nd of June to the 17th of June, you can see that that's a 12.5%, 13% move. And just to give you an idea and put that into perspective, if we look at Bitcoin, the move from the 2nd of June here, okay, so the move from the 2nd of June, we can see in Bitcoin terms, this 13% move in Bitcoin terms translated to nearly a 46% correction in this move, which is significant. Okay, so if we look at if we do get the rejection from here, you'll notice that if we do get the rejection and we get my projection here, if we do go back down to the base, you'll notice that it's 12.5%. It's comparable with this size of move. So if we do reject here and come back down to these lows, what that could translate to is a 40, the same move, so 45% from this high down to the lows. So I just want to show you something which is interesting, which also is a little bit of confluence and a little bit scary again. Some of you that have been watching the videos for a while will know what I'm going to say here, but you'll remember if we go back to the beginning of time, we measure the cycle low to the cycle high. That's between the 78.6 and the 88.6, the dotted line there. So immediately between is usually the area of consolidation before we take off. So same again here, cycle low to cycle high, 78.6 to the 88.6 retracement. The dotted line is almost exactly in between, and sure enough, you get the area of consolidation here before we take off. Cycle low to cycle high, yet again, is the 78.6 to the 88.6 retracement. The dotted line immediately between is generally where we get the consolidation here. And I just want to put the 200 simple moving average onto here actually, because that is significant. You'll notice that on these previous consolidation areas, the measure between the 78.6 and the 88.6, the dotted line, is actually the support of the 200 SMA as well. And here yet again, more recently we are below the 200 SMA, which is different. But having said that, you will notice that the cycle low to the high, the 78.6 to the 88.6, the dotted line between there actually comes out at around about the 13,870 mark. Okay, so the cycle low to cycle high, the 78 to the 88.6 retracement, the dotted line between is around about the sort of 13,900 mark, as per this purple dotted line here. Okay, so hopefully you can see that clearly, which is also the range high from here. So we had a mid cycle peak, which is the range high there. And the reason I'm showing you this, guys, is if we go back to the daily, we go back to where we are on a daily time frame now, and if we look at this this 45% move, if we do get the same sort of move back down here, what does that look like in terms of Bitcoin? Well, let's measure it. If you go to the high there, so from the high to the low, if we go to the 45% mark, as you can see, guys, it's very, very close, and providing some confluence with the fact that we might reach this range high again, which is between the 78.6 and the 88.6. The dotted line in between, as per the previous cycles, exactly the same happening again. I know that people say that this cycle is different, but actually, when you look back, tends to be some slight differences, but mostly it's exactly the same. So, if this does reject, doesn't break through, if it does reject and we get this similar move that we got from here to here, that could translate to this same move that we had, 45% move to the downside. And if we take the high to the low, 45% does take us back down to the 13,800 level, which is provides confluence, as I say, between the 78.6 and the 88.6, as per all of the previous cycles in the past. Is that definitely going to happen? Nobody knows for sure, guys. Nobody knows for sure. So, I mean, all I'm saying is simply, keep an eye on the S&P 500. Be very, very careful. We've come up to the underside. This orange dotted line here at 22,787 is the weekly 200 SMA. And as you see, as you saw, we did come up against it. We broke through, but on a weekly time frame, we very promptly came back down below that level there. So you can see that the dotted line there. So the two orange ones, basically, the reason, obviously, when we're on a daily, you can't see the weekly 200 SMA on a daily time frame. Hence the reason I've put it on there as a dotted line, an orange dotted line. If you go to the weekly, you can see that this orange line here is the 200 SMA. So you can see that they're the same there. Okay, but as I say, guys, we are below the 200 SMA. So we tried to break above. We didn't break above, and now we're rejecting off the 200 SMA, which generally, would lead to, it could lead to, considerable downside. Having said that, as I said in my previous video, there is every chance that we just come back down and we retest this shelf here of support here, which is at around between 20,000 and 21,000, basically. So that shelf of support there, just zoom in a little bit. So yeah, so as you can see, this blue box here is a shelf which is from which is provided from the wick highs here on a weekly time frame to the lows of this pivot point here. So you can see there's a doji there that could very likely act as a pivot point there. In fact, I'm going to move that up slightly, just to there. But as I say, in terms of prices, that's 20,800 to around the 21,000. So if we say between 20 and 21,000, if we come down and we start to bounce from there, we could get this nice bottoming pattern and then break through the 200 SMA on the next attempt to the upside. And as I say, the only caveat to that is what happens with the S&P, because if the S&P rolls over, make no mistake, guys, the Bitcoin and crypto and things will roll over with it. So keep an eye on that, guys. Be careful, protect yourself from stop losses and things, is what I'm trying to say. And I hope you've enjoyed the video today. I'm sorry it's a bearish one. Nobody really likes to think about the bearish possibilities, but I do feel a bit of responsibility to try and keep you all aware. If this lower support breaks, there's going to be an accelerated move to the downside. It's going to happen quickly. So, and it is a possibility, unfortunately, guys. So I just wanted to make you aware of that. Okay, guys, thanks ever so much for watching. I appreciate you listening, and I look forward to speaking to you next time. All the best now. Take care.